Hey guys, quite a lot has happened in the last 24 hours. We had a channel formation on Bitcoin, broke to the upside, so far getting rejected from 17k. We need to discuss that. But importantly as well, we also need to discuss the CBBI, which is the Collins Bitcoin Bull Run Index, okay? And that is essentially some guy named Collins Talks Crypto created this index to measure or to predict where the tops and bottoms will be on Bitcoin based on I think 9 historically accurate metrics. Now, it's played out pretty well in the past, and right now it's kind of saying the bottom is in, or at least very, very, very close to being in, which is consistent with my predictions. But the interesting thing is this. He's come out and said he doesn't think it's valid anymore. Now, I know this is a bold claim, but I disagree with the creator of the CBBI saying that it's not valid. I'm going to tell you why in a second. I partially disagree. But yeah, lots to talk about in this video, lots of bold claims to make, so let's get into it. As always, you can join the Wolves of Crypto VIP Telegram group using the link in the pinned comment, see the results in the past. You can join the Telegram community discussion group, and you can check out the Crypto Academy courses where you can learn about TA, learn about crypto. We've also got a YouTube channel for the Crypto Academy now. We're going to be posting collabs on there, me and Megawell Crypto, so go ahead and subscribe to that. Let's get into it. So this chart, this daily chart here, represents the state of Bitcoin right now in a pretty efficient manner. Just basically what's going on with Bitcoin is we had a move to the downside, obviously due to FTX. So far during that move, we had in the last couple of weeks, at least, we've seen dramatic compression, as represented by the Bollinger Bands, which are these blue bands here. They've come together tight, and hence we will be seeing a move very shortly. That move has already begun, right? We saw an explosion to the upside. Now, if we zoom in, we can get a better example of what that move is. We had this, which I would consider a bullish formation, right? A lot of people said, oh, this is a bear flag. It's like, well, no, that's not actually what a bear flag is. Very important to note. I noted this in a video a couple of days ago. A lot of people disagreed with me, and it turns out they were all wrong because they don't understand what a bear flag is. A bear flag is when you move downwards sharply, and then you see an ascending channel formation, okay? And then you move downwards again. This, of course, was a descending channel formation, which of course is a bottom reversal pattern, okay? It represents a reversal point, right? It represents consolidation towards the bottom and then a reversal. During this pattern, we saw dramatically descending volume as well, which represents a decrease in selling pressure as we head further downwards, which means the market participants at the moment see the fair valuation of Bitcoin higher than where that channel was. And that was perfectly demonstrated by this bounce to the upside here, by this break to the upside, I should say, which happened over the last, 8 hours-ish. So we bounced to the upside, but as of this point, right, and as of this point in time, we haven't actually seen anything too major happen because upon the bounce, and this is what I mentioned in the video a few days ago, if you remember, I said, in order for an actual macro move to be made, right, in terms of an actual somewhat shift in the trend, right, somewhat, it's very important to note, somewhat shift in the trend, we need to break 17k. So far, we came right up to 17k and rejected perfectly off of it, and we're still kind of lurking in between the channel and 17k. So my overall point still stands from a video a couple of days ago. Even though we broke the channel to the upside now, and even though that trade was perfectly triggered and we made some good profits there, or at least I did, and I suggested that people do the same. What we need to be seeing now, in order for anything to really change, is either a break above 17k, in which case this entire range will be flipped, and we can start moving towards 17.6k, which is of course the June low, and flipping that would be good because it gets us back into this entire range here. So again, breaking 17k and more specifically 17.6k would be it would bolster the bullish argument, and it will bolster the argument that maybe the bottom is in. But if we do actually come down and break back within this channel, this will be labeled a fake out, and then we'll be back in the range, and we'll have to see what happens with the rest of the channel there. So that's kind of the state of the short term. Even though we've seen a break to the upside, even though we made a good trade, nothing's really happened, right? We broke to the upside, but we're still in a range. So that's kind of the overall short term. We just need to be waiting for a break of 17.6, at least 17, or a break back within the channel to make any future predictions, because right now we're ranging. And when you're ranging with very minimal time, with a very minimal time period of range, you can't really make any other predictions because the move's already been made. So now we're just waiting to see what happens with it and waiting to see if it'll actually go past that confirmation point. So that's the short term. Okay, so daily chart still compressing a blue band, still got steam to go, still got fuel in the what would you say, in the engine there, in the steam train. But we just need to see it materialize now, and we're waiting for that. Now, I've made my points very clear on Bitcoin over the past year, over a year now. In November 2021, I said the top was in. I said that based on the 4-year cycle theory, all right? I said the top was in, basically at the top, very close to the top, low 60Ks. I said 4-year cycle says the top's in. I trust the 4-year cycle. It hasn't let me down in the past. Let's go ahead and go with it. And right now, the 4-year cycle is saying that the bottom will be in very shortly. The bottom will be in, according to the 4-year cycle, in Q4, which means... Oh, it's November 30th today, right? So sometime within the next 30 days, sometime within the next month. Now, it could leak into January. We've discussed that in the past, right? Q4, of course, is just imaginary. It's just a calendar made up by humans, right? It doesn't actually exist. It doesn't exist in the framework of financial market. So it could leak into January a little bit. But for the most part, it would be the best in terms of long-term predictability if Bitcoin did bottom out in Q4. And of course, there is an argument to be made. Okay, this is why I haven't changed this line here, this green line. There is an argument to be made that the bottom was actually placed last week. You can make that argument. And it wouldn't be an unsupported claim. Now, forget about the macro for a second, because we're going to talk about the macro in a second. I know a lot of the bearish people are kind of saying that the macro is the reason why we're going to go down further. I don't disagree with you, okay? I am a believer in the fact that the trend is your friend until it ends. And so far, the 4-year cycle is the strongest trend Bitcoin has ever had. It has not ended yet, and so I'm not going to say it's ended yet, right? There's a reason why our buying plan on Bitcoin, which we can bring up right now, actually, it should be somewhere over here on this page. Yep, correct. There's a reason why our buying plan, right, has a 50% buy at 17 to 18K, which we've already triggered, and a 50% buy at the trend reversal, okay? We are kind of hedging our bets here. We're only buying 50% at the moment. We've bought 50%. We're saving the other 50% of the capital on the side in case we do go down further as per the macro being bad. So we've hedged our bets already. So, you know, that's good. That's good regardless. So regardless of what happens, we've hedged our bets and we're in a good position. And anyone who follows that buying plan, I think in a year or so, they will not regret it. That's my opinion though. But you know, overall, what I wanted to really say is that there is an argument to be made, and it is a pretty decent argument, and it's in fact the argument that I'm mostly sticking with at this point in time, that the bottom might have already been placed, or maybe we could go a little bit lower, right? That's the argument that I'm making right now. Now, you know, my overall prediction is Q4 bottom, so I'm not necessarily too concerned about a price point. I've made that very clear in the past. Price points don't necessarily concern me too much. And as I said, the buying plan won't change regardless of what I say. Predictions are just words, it's actions that matter. But the argument is this. We've got an 8-year uptrending line on Bitcoin, okay, stemming from 2014. We've tested that. We whipped on that. We bounced off of it. We've got a pink support line at 16.2k stemming from back here in 2017. Again, we held that for 2 separate candle closes. 3, actually. We came down, held it again. Now we're bouncing. We've bounced off of it. We've also got the total cryptocurrency market cap bouncing off of this pink line on the weekly chart, which is the previous all-time high in 2017. Held that, bounced off of it. We also have, on the 3-day chart, the 3-day RSI support line at 34.18 around that point on the RSI, which every single time in history that we have dropped and dropped below it, which we haven't done yet, we've seen a 20 to 60% drop. And every time we've bounced off of it, which we're doing right now, we've seen a significant bounce. Again, we're holding that. We're bouncing off of it. So the argument is essentially this. We have dramatic support in this region, okay? We are also in Q4. And Q4 is, of course, where I think the bottom will be. So for me to sit here and say we're going to go down lower would be ignoring the entire premise of my prediction. We could go down lower, but at this point in time, with dramatic support and in Q4, I have to seriously consider this being the bottom, right? That's kind of my overall point. You know, lots of people disagree with me on that. Again, the people who trust the macro a lot more would disagree. And by the macro, I mean traditional markets, and that's fair enough. And that's what we're going to get into in a second. I want to briefly interrupt this video to talk about the BitGet Exchange. The BitGet Exchange has 5 times lower fees than Binance, which is the biggest major exchange in the cryptocurrency market on futures. It also has 0 fees on every single spot pair, so you can trade spot for entirely free, no fees included. It runs events. Right now it's got a FIFA World Cup event sponsored by Messi, the football player. It's got copy trading, strategy trading. It's got exclusive rewards and discounts in the reward center. It's got everything you need for a trader using an exchange. This is the exchange I personally use as a trader for my everyday trading, and I highly recommend everyone does so at the Wolves of Crypto YouTube channel. Sign up using my referral link for exclusive rewards and discounts. That really helps out the channel, and I appreciate it. For my fans from the United States of America, you can sign up using this exchange with a VPN and use the exchange with a VPN and just sign up using my referral link like normal, and you'll be treated like a normal customer because this is also a non-KYC exchange. So make sure to sign up using my referral link in the pinned comment or the description below, and without further ado, let's get back into the video. So this is the major topic of this video that I really wanted to talk about, the CBBI. We spoke about it in the introduction. I'm speaking about it again now. Collins talks crypto, Bitcoin bull run index, okay? Essentially, again, uses 9 metrics, right? All the metrics are here to predict where the tops and bottoms will be on Bitcoin. You might have seen this chart before. Right now, the confidence level on the CBBI is 3, okay? What this means is that the closer the confidence level gets to 0 out of 100, the more likely that the bottom's in, according to this metric, right? So when Bitcoin bottomed out in 2018, the confidence level was 3, which is what it is right now. When Bitcoin bottomed out in 2015, the confidence level was 0. When it topped out in 2018, the confidence level was 100. It was around 98 or 99 in 2013. And in the last bull run, it was around 84. So it did deviate slightly in the last bull market. That's worth noting. And so we could see a deviation. We could go lower in this bear market. But at this point in time, we can't ignore that. We can't ignore the fact that we're on major support. We can't ignore the fact that we're in Q4. And we can't ignore the fact that all the traditional metrics are saying that the bottom is quite likely to be in or will be in very soon. Okay, we can't ignore that stuff. Now, the actual creator, which I have on the screen right now of the CBBI, is saying in a recent video that he thinks it's invalid, right? And the reason why he thinks it's invalid is because of the macro recession, the macro bear market on traditional markets, okay? So he's pulled out a chart, which I agree with, by the way, which says that essentially the S&P 500 and hence the traditional markets don't bottom out until the Federal Reserve has pivoted. Okay, and he's saying that the Fed won't pivot until 2024. I disagree with that. He's saying November 2024. I don't know where he's getting that data from, by the way, because the official market predictions, right? If you actually follow the official market predictions says it is most likely that the Federal Reserve pivots, and you can go on this website and find it for yourself, that the Fed pivots in November 2023, which means they start decreasing interest rates in November 2023. So he's saying 2024. I don't know why he's saying that. It's 2023. And so the traditional markets, as per this metric here that he's using, which I agree with, by the way, the traditional markets shouldn't bottom out until at the very earliest around late next year. Okay, and maybe early 2024. So then the argument has to be made, and this is an argument I've dealt with in the past multiple times, and it's a strong argument. I'm not denying the fact that the argument has relevance. Where is the chart I'm looking at? All right, the argument is this. How can Bitcoin bottom out when the S&P 500 is going down? Okay, and my answer would be this. Bitcoin and the S&P 500 are not perfectly correlated. Right? Very simple stuff. That's my opinion. I don't think they're perfectly correlated. For example, Bitcoin topped out in November, S&P topped out in January. By the time the S&P topped out, Bitcoin was down 40%. We can see the same thing to the downside, okay? Now, obviously, if I'm saying the bottom's going to be in Q4 and the S&P 500 bottom is going to be at least like 9 months away from that, it's a little bit different than what happened in the bull run. But my overall point still stands, right? At this point in time, I believe in the trend. At this point in time, it would be logically inconsistent, I guess is the way of saying it. It would be logically inconsistent of me to say that Bitcoin will bottom out in 2024 or 2023, late 2023 with the S&P, when the 4-year cycle trend is still valid. It's still valid. It hasn't been invalidated yet, right? CBBI hasn't been invalidated yet. All of the invalidations are pure speculation. None of them have materialized at this point in time. So that's why, as a trader, the trend is your friend until it ends. Right, and the trend hasn't ended yet, and you could say, well, Wolf, the trend has in a way ended because we've been in a macro bull run for the entire price history of Bitcoin. Right now, we're in a macro bear run, so the trend is invalidated. It's like, well, that's true, okay, that's true, but it hasn't actually been invalidated yet. You are speculating that Bitcoin will follow what the traditional markets does, which historically is not the case. Okay, in 2021, when Bitcoin topped out here in April 2021, the S&P 500 was still in a parabolic rally and we dropped 50%. Okay, there are deviations that happen, right? Between the time of 2017 and 2020, guess what? S&P 500 was skyrocketing. Okay, Bitcoin went sideways for that entire 3-year period. There are periods of time in which the 4-year cycle is much stronger than the macro. 2018 bear market, predicted by the 4-year cycle, Bitcoin dropped 85%. S&P went upwards, same thing in 2014. So for me to sit here and say that, traditional market's going down, therefore Bitcoin should, I just don't see I understand they're correlated, but I just don't see the concise connection that some people are pointing out. At this point in time, my whole opinion on Bitcoin is this. Q4 bottom, I think the bottom is relatively likely to be in already or very close to being in. I think that obviously it's not confirmed. Nothing's confirmed at this point in time. Therefore, I'm not calling the bottom. I'm just saying it's definitely possible. We've got major support here. We need to start considering it. I think that, if I had to be completely honest with you, I would predict that Bitcoin does deviate from the S&P, and I would predict that Bitcoin bottoms out before it and does start moving upwards before it, as Bitcoin has always done. It's never been perfectly correlated to the S&P 500. I don't see why that would start now. But it certainly is a valid argument to be made. I'm not necessarily discounting the argument. I'm just saying that, I'm waiting for my original argument based on the 4-year cycle to be invalidated first before I really start taking it seriously. The fact that I haven't bought the other 50% of my investment, and the fact that I'm not buying the other 50% of my investment until the trend reverses, should be evidence enough to you guys that I am considering the other argument. I'm not so confident in the 4-year cycle that I bought in 100%, right? I'm holding back a little bit here. I'm being conservative, and that's what you need to do when there's many different scenarios that all conflict towards each other. But that's the video, guys. I hope you enjoyed it, and I'll catch you in the next one. Cheers.